Hey guys, welcome back for week 2 of trading in the stock market. This week, I was only able to trade from Tuesday to Friday, 4 days, because of the 3-day Memorial Day weekend. So I couldn't get in all 5 trades that I might have liked since the stock market was closed on Monday. But overall, I've really been enjoying my time day trading. I get up at about 8:30, watch some stocks, make my picks, put some lines down, my support and resistance, and then wait for the open and get into trading. I had my losses this week and I had my winners. We'll go over all of my trades that I made this week live and going over what I did right, what I did wrong, and what I learned, so you guys can join me and maybe learn a thing or two as I learn. Let's get into our first trade. First trade of the week, I took on Tuesday, saw a good pattern, so I went for it. 3-bar play, as you guys know if you've watched our previous videos, big green bar, short resting bar, and then looking to get in on that third bar. Now, unfortunately, this was kind of a slow burner. It looked like it was obeying the support lines that I had drawn, and I was just waiting for that pop. So I thought it was going to make a run for it, and this is obviously at very fast speed. These are 5-minute candlesticks, but it ended up breaking down below support, and it just never really recovered. It just kept going down until it hit my stop loss, which was a little bit unfortunate, but you can't always win them. I think we took a pretty decent pattern and it just ended up not panning out. So overall on Tuesday, we ended up losing, I think, about $4.50. Trade number 2. This is the trade I took on Wednesday. Saw a beautiful pattern opening up. Couldn't let it go. I saw a perfect opportunity to get in and boom, just took off. There's not too much to say about this pattern except it was really good and it worked out perfectly. Just exactly how you'd want it to turn out. You know, perfect pattern. Bar number 3 just shoots up. Boom, you're out of the trade. You got your money. You're gone. It was great. I loved it. Perfect pattern, perfect execution. Very happy with how things panned out. The only thing I would note with this trade is that you had a fairly good size green bar igniting a move, and then the second green bar continued the move. So it wasn't the first bar of the move, which you would like it to be ideally, but after the third bar, you had a red bar that was at equal highs and about 50% retracement of that bar, and I thought it looked good, so I went for it. Trade number 3, which was the trade we took on Thursday. I want to talk about this one specifically because it was the first trade since I've started that I didn't take a trade. No trade on Thursday. And I think that's important because you need to show some sort of restraint instead of forcing the trying to force a trade, which I'm happy with. I'm glad I did that. Because on Thursday, I didn't see really any patterns that looked very good. These are some of the trades that I was looking to get into. I thought, you know, the pattern looks like it's setting up. It looks like it's setting up, and then crash, crash, crash. Just nothing. No trades panned out. And luckily, even though I didn't make any money, I didn't lose any money on Thursday. So you don't always have to take a trade. If there's nothing to trade, don't force a trade. Another thing, on Thursday, I started to question, why exactly do I use a gap up scanner for pre-market and trying to find stocks that I'm going to trade during the day? And I thought to myself, like, well, the strategy that I was learning from on YouTube, they used a pre-market gap up scanner to scan for stocks that had potential of moving or had shown signs of moving. And that's great. It's great that to use that. But what I was finding was I wouldn't find stocks to trade all the time, or it might only be one. And I thought, you know, maybe I'm missing something. So I remember using percentage gainers are percent change gainers, which shows stocks that have gone up or down in percentage. So I started using that scanner, and ever since Thursday, I had been using that scanner to look for stocks, and I was finding success in using that as soon as the market opened. So I would use the gap up scanner prior, practice plotting support and resistance lines, and basically just do that. And then 90% of the time, the stocks I was looking at would, a lot of the time, they would just crash out. And I would end up finding my trades in the percent gainers scanner when the market opened. So as soon as the market opens, I usually switch over to the percent gainers scanner for when I look for stocks. I do keep an eye on the gap up scanner, but typically I will just switch over to the percent gainers, and that's a better indicator for moving stocks because it's live, and stocks that didn't show up on the gap up scanner are showing up now, and they're actually moving right now, and I can trade them right now. So a good bit of information. Check out I would recommend using a percent gainer scanner for looking at stocks before the market, or as soon as the market opens. So Friday's trade, I ended up actually missing. For some reason, I didn't have OBS open, so I missed the trade, but I promptly opened it up to try to catch like what I could and just kind of explain what happened. So with Friday's trade, I saw a big engulfing green bar, and I was waiting for the resting bar to finish. And at the time, it was a short little red bar. I was like, oh, perfect pattern. So I put my buy bracket order. If you're not using bracket orders, you got to get with it. Make bracket orders, very, very helpful. I've set my bracket order to buy 1 penny above bar number 1 and 2 at the time, because I was like, oh, that's gonna close red. The candlestick's about to close. Well, started looking at some other stocks, and it ended up just shooting up really fast. So I went in and it shot up. I have a default on my bracket for 10 cents up, 10 cents down. Usually I adjust it. Well, it hit my buy and went all the way up and hit my 10-cent stop limit or sell limit. So I was in and out of that trade, and I think I made like about $10 or $11, something like that. Then I go into my monitor and I'm like trying to show my profit loss on the trade, and I end up getting into another trade that I didn't even mean to get into. So I ended up getting into this other trade on a pattern that I put in a buy order on, because I didn't think it was gonna happen that quickly. Not good, big mistake, don't do that. And it ended up shooting up a lot, but did not end up hitting my target. And then because it caught me off guard, I just lowered my stop limit, and I basically just wanted to get out of the trade overall. But part of me was like, oh, well, I'm in the trade, might as well try to take profit. But it started to stall out right before my stop or my sell limit, and then I was like, oh man, well, I better just get out of this trade. And that's what I ended up doing. I just lowered my sell limit and got out with a small gain of a couple dollars. So profit loss on the week. Day 1, which was Tuesday, we lost $4.50. Wednesday, we made $9.90. Thursday, we didn't take a trade. Friday, we made $11.13 for a total of $16.53. We were down $1.32 on week 1. Now we're up $16.53 on week 2, which gives us an overall gain of $15.21 for our 2 weeks. All right, guys, that's going to be the end of the video for today. Make sure, if you enjoyed, to leave a like. And if you have any questions or want to leave me your feedback, make sure to leave me a comment below. But otherwise, have a wonderful rest of your day, and I will catch you guys in the next one.